Alright, so continuing with the series on how to calculate depreciation, we're now going to look at how to calculate depreciation on diminishing method. Here they call it diminishing balance, right? So the previous one we looked at how to calculate it at cost, and we know that each time it stays the same. The only difference would be if it's for specific months. But now looking at the diminishing method, we know that the the not method, not calculation, English is running away. The formula for it is cost minus accumulated depreciation multiplied by the depreciation percentage. And we know that each time our accumulated depreciation is all our depreciation added together, right? Depreciation for year 1 plus depreciation for year 2, so on and so forth. So that is our formula. Remember this, know the difference. Now the second thing that we always want to do when you're calculating depreciation, whether it's for asset disposal or just depreciation for that current year for that asset, is know your timeline. Know when it starts and when it ends, right? We did this in the last video, but the more you do it, the more you get used to the timeline that at some point you won't even need to draw it up, right? So if you're still learning, if you haven't mastered this, if you're not used to it, I suggest each time just draw up your timeline. So our timeline consists of the day the asset was purchased, the day the asset was sold, and the year end on every year, right? So timeline creating is gonna go from there up until there. Now we have the day the asset was purchased, which is 1 August 2014. So we'll say there 1 August 2014. Then the year ends from 1 August, the year ends on the 31st of July, right? So the month after July is August. So that we know is a full 12 months. So 31 July 2015. We know that this is 12 months. Just gonna write 12M there, right? That's 12 months. Then we have from July up until July the next year, right? 31st July 2016, right? And that is another 12 months. Now another year goes by, and that is 31st July 2017, right? But this asset does not stay for the full year. It stays only up until the 30th of January 2017. So only up until somewhere there, 30 Jan 2017, right? So this asset essentially, from there till there is 6 months. 6 months. So this asset essentially stayed here from there 1 August 2014 up until 30 January 2017, and we must account for the depreciation in this year, that year, and this final 6 months, right? So getting that out of the way, we get to the fun stuff now. Our depreciation from the 1st of August 2014, right, from there till there, right, up until the 31st of July 2015, right? Remember, this is our first year. We've bought the asset. There's no accumulated depreciation up until that point. So now we know that it's going to be cost, which our cost price is 80,000 multiplied by 20%, and then we have 16,000 there. Now accumulated depreciation, remember we said that it's our the depreciation from previous years plus the current one, right? So when calculating year 2, your accumulated depreciation at that point is 16,000, right? At year 0, your accumulated depreciation was 0, right? So you said 0 plus 16,000, you get 16,000. So calculating our accumulated depreciation on calculating our depreciation on diminishing method for the year 1 August 2015 up until July 2016, 31st July 2016, we will say 80,000 minus our accumulated depreciation of 16,000 at that point, 16,000 multiplied by our 20%, and that gives us 12,800. Now, our accumulated depreciation at this point at the end of this financial year, right, will then be 16,000 plus 12,500, and that will give us our new accumulated depreciation of 38,500. Right? I'm just checking my notes here because I've written them down, right? Not 38, sorry, 28,500. Now for the final year, right? For these last 6 months, remember when you calculate accumulated depreciation on any asset, especially when calculating for asset disposal, you calculate it up until the day it was sold, right? Normally they would give you until the beginning of the financial year, and then to trick you in a way, you would just use that. But remember, up until the day it was sold. So for the last time, we're gonna have from 1 August 2016 up until the 30th of January 2017, and we would have the 80,000 minus our new accumulated depreciation of 28,500 multiplied by 20%, and you'd get 5,120, right? Now the whole point of you doing this is to find out what your accumulated depreciation is at that point. Sorry, I even forgot about this. What your accumulated depreciation is at that point and what your carrying value is. So our depreciation, filling this in, for year 1 was 16,000. Our accumulated depreciation at the end of that year is still 16,000, right? Remember, 0 plus 16,000 gave us 16,000. Our carrying value there was 64,000. We calculated that by saying 80,000 minus 16,000, right? Then for year 2, our accumulated depreciation was 12,800. Our accumulated depreciation at that point was 51. No, sorry, I don't know why I said that. It was 28,500. It is our carrying value, that is 51,200, right? And we got that by saying 80,000 minus our carrying value at that point, which is 28,500, and that gives us 51,200. Now for our last year, our depreciation was 5,120. Our accumulated depreciation is 28,500 plus 5,120, and that would give us 33,920, right? Then our our carrying value, sorry, would be 80,000 minus all our accumulated depreciation of 33,920, and then you'd get your final carrying value of 48,080. Yeah, right. So that is calculating depreciation on diminishing method. If you feel like you get this, rewind the whole video to the beginning where it was a clear screen and try to do this by yourself, right? You should be able to fill in all of these here, do all those calculations by yourself, fill in the table there, and also understand what the timeline is, right? If you don't understand this, do it again. If you do, you should be able to tackle a question on asset disposal. So you can just use this one and fill in your ledger on asset disposal. Just AD there, asset disposal.